Stocks took a major tumble today with the S&P down 1.7%, the Dow down 1.78%, and the Nasdaq down 2.19%. Now, there's a lot of reasons why the markets are selling off, but there are some reasons bigger than others. In this video, we will cover them all. If you like this kind of content, be sure to smash the like button down below. Also, subscribe to the YouTube channel if you want more daily content revolving on the stock market. Let's get into it. Okay, so the first reason, and probably the biggest, is one of Chinese lenders, Evergrande, is in billions of debt and don't know if they're going to be able to pay it all off. Because of this, it's sending legit shockwaves through the whole market. The Chinese market and the US market is getting affected. Now, where I see this as a kind of a exaggeration is people are comparing this to Lehman Brothers, whose implosion sparked the great financial crisis in 2008. I think that's a bit of an exaggeration. I don't think that this is going to have that big of a effect on our market, while we still may see a dip, and that's just going to create buying opportunities, and I think this is only temporary. Now, there are fears that this company is going to default because they're not going to be able to pay back all of their debt. This will spark a lot of fear in the markets, but again, I feel like this is going to create good buying opportunities, and this is only going to be temporary. I don't see this having a long-term effect on the stock market. Honestly, I see this lasting maybe a couple weeks. Maybe the fears going to be around for a couple weeks, and then we are presented with good buying opportunities, and things will start to go back up again. Nonetheless, this is weighing on the market, and one of the biggest reasons why we're seeing the sell-off that we did. The second reason is the Fed meeting happening tomorrow and Wednesday. They're probably going to give us an indication on if they're going to taper or when they're going to taper. Tapering talk is never good for the market, so we will keep up to date as that happens tomorrow and Wednesday. The third reason is the COVID Delta variant. It is now causing 2,000 daily deaths, which is not good because that is the most since like back in March. So as Delta gets worse, that puts more fears back into the market, because if you think back what happened when COVID-19 actually came about and sparked all this fear in the market and our markets tanked. Same thing with the Delta variant. As it gets worse, more fear is going to be put in place in the stock market, and fear and uncertainty is never good, which always leads to big sell-offs. The fourth reason is our nation's debt ceiling. Janet Yellen requested that we raise or suspend our debt ceiling or risk an economic catastrophe. Now, Congress has raised or suspended our debt ceiling about 80 times since like 1960. So I don't think that we are going to allow the US to default, which would be extremely, extremely bad for the markets. But I don't think that we're going to let it get that bad. I think they're going to get on this and work on it and probably either suspend or raise our debt ceiling. Reason number 5 is people have been anticipating a correction. I mean, we've been on a massive, massive bull run, and it's been expected that we were going to have a 5% crash. Now, is this going to happen? Nobody really knows. But with all the fear and uncertainty going on right now, with everything that is happening, there's a good chance that we could. So if you are in positions, don't be afraid to trim your positions, pull back a little bit, have enough buying power for when the stock market dips, you can actually go in with more buying power and get in on better deals. The next reason is inflation, if it's going to linger or if we're going to start seeing an inflection point where it starts going down. I feel like over the next couple months, we're going to start seeing inflation go down a little bit, not completely go away, but I think we're going to see it fade down, and that's going to be very good for the markets. The last reason is the smallest, and it's the September stock market crash. A lot of people fear that September is where the stocks just plummet. While it's happened before, I don't think this is the biggest reason why we're seeing a sell-off in the market. The reason we're seeing this sell-off is, one, the China Evergrande firm that is in a lot of debt, and two, the Fed meeting coming up, which is going to talk about tapering. Those are our biggest needle movers when it comes to the market this week, and that's why we're seeing this big sell-off. Now, is this going to continue? Is a sell-off going to keep going? I don't think so. I think all of this fear, all of this uncertainty is just temporary. This is not going to be a long-term play, right? I think this is going to present good buying opportunities. We're going to have good deals. I've pretty much raised a bunch of cash to dump into stocks because of this, right? I think give this a couple weeks, right? We may see a little bit of positivity in the markets on Monday, right? We may start to see that recovery from all of these sell-offs that we're having. So no, I don't think this is long term. I think this is only temporary, and this is going to present good buying opportunities. So that's it for this video. If you like this kind of content, be sure to smash the like button down below. Hit the subscribe button. Join the family if you want more daily content around the stock market. And guys, I will catch you in the next one. Peace.